Hey everyone, there was some really big news coming out of Dutch Bros stock in their latest quarterly update. So in this video, I wanted to go through those details. I selected some of the biggest items that I think you should know about. So let's go through this brief video highlighting some big news for Dutch Bros stock investors, starting with an update on a promotion the company ran in March where they offered 4 medium drinks for $15. The promotion lasted 6 hours on a Wednesday afternoon, and it resulted in the largest sales day in the company's history, driving same shop sales upwards of 40% higher than a typical Wednesday. Now, two things about this. Number one, yes, it's great that it drove such a big boost, but we need to know more about this before we draw a conclusion that, oh, they found a secret formula to drive sales growth. Typically, when companies run a promotion like this, it's supplemented by an aggressive advertising and marketing campaign. So it's not just that they offered 4 medium drinks for $15 and that got everybody excited. It's probably that the 4 medium drinks for $15 deal was supplemented by a big advertising and marketing campaign and the awareness, and that may have played just as large if not greater factor in driving the sales growth. And so while it may have driven a strong sales growth, what's the side effect? How much did it cost the company? What's the overall margin impact of this move? And we'll know more about this when they update investors again in a couple of months. But this was something, um, overall, I like that they're experimenting and trying things, but it's something to keep an eye out for, the impact of these kinds of promotions on the bottom line. Also, on January 1st, the company increased base wages, and that's having a huge impact in terms of profitability because this is across the board wage increases and it had millions of dollars of impacts on the company's bottom line. And this was something not really by choice. If they wanted to keep these people working at the shops, they needed to increase wages because other places are increasing wages. They are offering higher monetary compensation and benefits to attract employees. And Dutch Bros had to just match. They had to. Otherwise, they risk losing a lot of their people. So their people pipeline now includes more than 275 operator candidates to support new shop growth. And I like that they're doing this. I like that they're working on creating this pipeline of people that can open new locations because I'm in favor of expanding through franchising, as much as expanding through your own company owned locations. I do think you need to have some company owned locations to prove the concept, to prove that it's profitable, to show the franchisees how it's done, to have the demonstrable uh, operating process there for franchisees to observe and copy and replicate. But I don't like that in this most recent quarter, I think they opened 45 new locations and 41 of them were company owned. I would have liked to see a more balanced growth from Dutch Bros, so I like that they're working on it. I want to see more from this area. So company operated shops open since 2019 generate about 2 million in sales annually, and that's 20% higher than company operated shops opened prior to 2019. So that's good news that the newer locations are ramping up quicker because, most likely because there's more brand awareness now as it's expanded to more locations. Although they have seen pressure on build costs and are working actively to value engineer our shops in order to offset some portion of that escalation. And I'm seeing this with a lot of the companies that I follow, a lot of these types of companies, I should say. So I follow Starbucks, I follow Domino's Pizza, I follow Chipotle, And all of these three companies have said that they're having difficulties opening new locations because costs to open a new location have risen, but also there's shortages of supplies and materials to open those new locations, including labor, having a hard time finding people to fill those locations. So there is a lot of pressure in opening new locations, and Dutch Bros not unique in this regard in facing pressure on building new locations and the constraints facing new openings. So despite these tougher conditions, their new shops continue to achieve strong cash on cash returns. So despite the constraints, they're still seeing strong returns for new locations opened. And that's really good news. And that bodes well for the company's future, because if they're doing good now in these constrained times where costs are so elevated and supply chains are snarled, imagine what it could be, 2 years from now when supply chains have normalized and inflation is under control. It really bodes well for the company longer term. All right, but that's all I've got for this video, highlighting the big news coming out of Dutch Bros stock. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.